Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. So this is going to be episode 9 of the trade breakdown. It's where I'm going to go over exactly, to the best of my ability, a trade that I just took on a momentum stock. These are momentum strategies. This is where I want to get good entries when the stock proves itself. So I want to make sure before I get into this stock that it is going to be the one that gives me that 10 cents, 20 cents. I'm just looking to scalp these, not marrying these stocks. Like I say all the time, I want to get in and out in a minute or two. If I am in and out within a minute or two, that means that I had a good trade. I don't want to be in these stocks for a long time. So with that being said, let's share the screen and we're going to share the trade. So this is EVGO. These are the pre-market gappers. This stock has the most amount of volume. That means there's a lot of people trading it. And let's just extend that trend line. So that looks like it's still holding up. So I had drawn this trend line out before I got into the trade. What this was setting up to me was a very nice ABCD pattern. And as we saw, price ripped up, and this has a catalyst, okay? These are things that, before you trade any stock, and something that's up a lot, it's got a ton of volume, you want to go in and take a look at what the news was. Sometimes news are better than others, and sometimes they don't have any news and they're just running on sympathy with another sector that may have news. The EV stocks, EV charging, this stuff has been hot this week in particular. So I felt comfortable with the catalyst, and the catalyst was very good. General Motors and EVGO boost build plan for high power fast chargers across the US. That is not a bad catalyst. Right here at 720, EV charging partnership with Uber. Okay, so this is something that is definitely has a catalyst that I'm interested in, especially this week. So now, what do I want to do? Okay, I look at the float. I went on FinViz because this 264 million number, it might be accurate, but I wasn't finding the exact float. This was not trading like a thick, well, I guess it kind of was over here, but either way, it was definitely giving us some really big range from 13 up to 16, pulled back to 14, all the way up to 18, and then started to settle down. And that's where I drew out this trend line. And I'm going to bring it up on a bigger screen so we could take a look here. This was my entry right here. And I'm going to get into exactly why I entered there, because I think that's really, really important. I was sitting here from this. I was sitting all through this. I almost got in here, and I'm going to show you the reason why I didn't, because we were coming up against this pre-market high. So a lot of times people will take trades and then sell at the pre-market high. And we saw that. And if I'm going in with 500 shares, which by the way, I'll normally trade 1,000 shares. The reason why I took 500 is because the spreads were a little wider. So my risk I wanted to minimize. And, I am buying something that is pretty extended, especially on the 5-minute chart. This thing was pretty extended. And then it started setting up a nice 5-minute chart. I'll actually show you guys here. This is what I was looking at. So when we made the initial move up, we started to build out a little bit of a base. That's what I was waiting through. I'm waiting through a base. I'm waiting through the momentum of this incredible stock market we have in front of us to give me that volume. And this is where I get involved. I like to be trading with the high volume. I didn't want to get in over here. I saw there was much less volume going on. We got some spikes and then it pulled back, very little volume, a big red candle here, which is a little deceiving because I was watching this. This was a very high amount of buying that came in, and we just got that, you know, pullback, which happens, and then it pushed up right back to the same spot basically 2.5 minutes later. So this was not a big deal, this big red candle for me anyway. So we go up here. I'm very interested as we're breaking over all the key levels. 18, we go all the way up to 1820. This could have been an entry for a quick scalp, but we were coming into this. So I waited a minute. I'm happy I waited a minute and didn't chase. It never held up 18, and then it came all the way back to our trend line. This is a spot where you can buy on the trend line, but it's more risky. As you can see here, it's more risky to buy on the trend line on a momentum stock before it's proving that it is moving. I want to be jumping in stocks as they're moving because I only want to be in them for a minute. I don't want to buy at a trend line and then just hope and wait for the stock to go up like a value investor. That's not what I'm doing. Now, sometimes I'll do that. I'll buy at the trend line and then I'll sell if the trend breaks. That's not what I felt like doing this morning. And I just waited for this candle right here. So once I saw this trend line hold, right? That's my first confluence. Very nicely, it held. Then we ripped through 18 again. The only difference is we hold 18. And at that point, I see the big bids on 18, hold the stock up, and that's just a matter of when I'm about to get involved. I loved to see this, and you can tell, look at all this volume. I'm trading the stock in the most amount of volume in the pre-market. Nice green volume. And I sold into that, you know, that momentum. So other traders that were just getting in also, I sold my shares to them. You know, sometimes it goes further, and in this case it did, but it didn't. It did come back down below entry. So it's not like I'm ever going to be buying and holding these things through that. It's just not going to happen. So I want to get in and I want to get out in the next minute if I can. So these are good entries. Whenever I'm in a stock for 1-2 minutes, that means I hit the entry very good. So a little bit of patience. It took patience on this one. It wasn't my typical gapper to be trading because it just wasn't up that much. You know, it was up 38%, I think, which is a lot. Don't get me wrong, but it's not like the gappers that we see with the low floats that could really move. But I did know that I could grab my 20 cents. That's what I'm looking for. 5, 10, 15, 20 cents on 500, 1,000 shares. That's not a bad morning. It's 8:27 a.m. Not a bad way to start the day. So that's it, guys. I hope you enjoyed this trade breakdown, EVGO, and my thought process of being patient, waiting for the right time, waiting for the right entry, and then not hesitating, getting in and scalping, getting out. So hit the thumbs up, guys, for the video. I'll see you guys back on the next one. Take care.